can't take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
Everybody, happy Tuesday. This is the morning show, Stock Market TV. Spencer, Steve, JC, Alfonso with you this morning. Good morning, chat. Chat is active today. Good morning, Per, Phil, Only Dads, Dawson, Dr. Horton, Peter, Ryan, Stock Market Mike, Mary, Joe. We can keep doing this all day, but we don't have time for that. So we have to get to the show. We got a lot to get to today. What is going on in India? Have you guys seen what's going on in India overnight? Dear Lordy. We got some action over in India. We'll talk about that. Also, in case you missed last night, the monthly strategy session, All-Star Charts, we'll have a couple highlights for you. Just a couple highlights, just enough to wet your beak. We'll have Larry Thompson on the show. We'll have Patrick Dunawilla on the show. Hopefully, he's still in Sri Lanka, so hopefully he joins us today. But we'll find out. How about that? So you know the drill. Smash the like. I got JC. I got Steve here in a sec. Let's roll, shall we?
All right, we are back, baby. We are back. JC's still at the beach. JC's in New Jersey. That's right. Barely.
That's right.
All the way down. Far away from India.
Really far south. You're way down there.
I'm right by Cape May.
Yeah, I've never been that far. That's not true. I have been that far now.
It's nice, man. You know, I mean, you keep going down. It keeps getting nicer and nicer. You pass Atlantic City. Do not stop there. Just keep going. And just, you know, stop before you get to Wildwood. Skip Wildwood altogether. There's no reason to ever go there. It's gross, dude. It's like grimy and like, you know, carny folks, smell like cabbage, small hands, nomads, you know. And then Cape May is lovely. A lot of history out in Cape May. And the zoo is great, dude. They got 2 cheetahs. They got a snow leopard. They got black bears, they got brown bears, they got monkeys for days, they got a toucan. Toucans are sick. These beaks are out of control, man. Love it down here. Good eating too.
No, I've actually never been to Cape May. True story. So
Cape May's cool. Like, remember, like back in the day, like in the 1600s and like the 1700s, like the New Yorkers and, you know, Philadelphia and New York were like 2 really important cities, you know, relatively speaking, way more important then than they were now. So if you can imagine that. And this is where the rich folk would go summer, you know, down in Cape May.
That's right.
So some of that architecture is just sick, dude. There's so much history there. It's really cool. But then the whole town burnt down. They rebuilt it in the late 1800s. So a lot of that Victorian style architecture and stuff. I'm into that. it.
Yeah. All right. We'll bring Strazza on in a sec. You want to do some state of the markets?
Please.
All right.
Let's do it. All right, guys. Let's do just a quick little state of the markets. We are looking at the Dow futures down 120 points. That's about 1/3% for the Dow. S&P futures, again, also down about 1/3%, 52.80 on those S&P futures. We're looking at the NASDAQ down again about 1/3%, about 60 points on the NASDAQ futures. You've got silver down almost 3% on the day, back under 30. We're looking at crude oil down almost 2%, back under 73. Bond futures actually up again, up about 0.5%, back above 118 on the 30-year futures. Gold also down, not as bad as silver, down almost a full percent, 23.50 for gold. And of course, over in the funny money, look at Bitcoin hovering right around 69,000. Yesterday on the show, Brian Shannon said this was it. They're about to get going. Ethereum flat on the day, 37.60 on the Ethereum. Looking at Solana. Solana is up a little bit, actually. right around 166, and then total crypto market cap, Spencer Israel, we are looking at about $2.5 trillion, and that is the current state of the markets. But India, front and center, Strazza, India getting the crap kicked out of it last night, reminds me a little bit about, the Trump election, that nasty decline overnight, as the market was recognizing that Donald Trump was going to be the next president of the United States. They weren't too thrilled about it, came all the way back. And then the year after Trump was elected was one of the greatest, least volatile years in the history of the stock market. Not many people saw that coming. Why don't you throw up that chart of the Nifty 50, Spencer? Just really getting killed, down 6% this morning. It was where it closed. It was down a lot more. That would be equivalent to the Dow Jones Industrial Average losing about 2,300 points in one day. How do we feel about that?
It's not just India. Did you see Mexico yesterday?
Yeah.
So it's election season, and these kinds of moves happen. Hold on, I'm just marking up a chart of Mexico real quick. I mean, this was worse.
Yeah, the EWW down 10%. Of course, the ticker symbol is ooh.
So Ryan Dietrich with the joke that everybody wanted to make yesterday on Twitter. He got to it first, it seems.
What? Ryan Dietrich said what I just said?
He just tweeted, ew.
Oh, too easy. Too easy.
Yeah. Here, throw this up. But no, that's a nasty candle, and it's coming from a leadership group internationally. Yeah. Mexico's been really good. You could zoom out on this chart. It was dealing with the logical level of overhead supply, but it's failing in a big way here. Now we're seeing India follow lower. We were just saying, Fonz gave a delightful presentation about this topic at our Portfolio Accelerator. We've been talking about, wow, ex-US stocks really picking it up, participation expanding around the globe. And then we come in this week, and these things are just getting slayed left and right. So it's something to keep an eye on. The rest of the space continues to look okay. We had groups like China, other areas of Southeast Asia, other laggard countries kind of getting up off the floor in May. And that momentum seems to really have come out of these groups by now, if you look at something like China. So that's happening. So it's just something we'll continue to monitor. I think breadth continues to be okay overseas.
The Nifty 50 has now officially lost all of its gains for the year. Slightly positive for the year now on a closing basis.
Who cares?
But on an intraday basis, gave it all up.
Yeah. I mean, lucky for us, we don't have to measure ourselves based on year-to-date returns.
This is true. I'm mostly looking at it from what you just said about Mexico, like a leadership group. India has certainly been a leader, not just in emerging markets, but around the globe.
Listen,
big stick there for India. Big stick.
I've been showing the China-India ratio to anybody who will listen. We talked about it with Jeremy a little bit last week. You missed a lovely interview.
I know. He's the man, dude. He's the man.
Jeremy Schwartz, what a cool guy.
Yeah.
He's an India bull, big India bull. A lot of people are. Nobody's a China bull anymore. The China EM weighting used to be like 40%. India was below 10. It's almost at par. It's close to par these days. I think you're going to see a massive unwind in that ratio. We're seeing momentum come into China over the past few months. We're seeing momentum come out of India just yesterday.
Yeah.
You're going to see a big unwind and a reversion back to kind of the old weightings or something closer to the old weightings where China is much larger again. I think we're getting close to peak India for now.
Can we, Spencer, can we throw up the Global 100 index? This is the monthly chart here, slide 3. This is the Global 100 Index Fund IOO making new all-time highs, right? So just to put things in perspective, this is about 60% United States.
It's another Mag 7 index. Everything is any sort of diversified U.S. or world index that's going to cap weight the largest companies. These Mag 7s are just that much bigger than everything else. They just end up dominating. I mean, do you agree?
Sad but true.
Are you pulling the weights?
Well, first of all, I don't think there's anything sad about it. What's sad about it, Spencer?
I didn't say it's sad.
No, because that's the end of the story right there. There's nothing more to say.
Yeah.
Here, throw up the new slide 3. Why is this not letting me throw up this chart? I want to throw up the global Dow. It's not letting me. Here, Spencer, I'm gonna drop it in the Slack so you can put it in. For some reason, it's not letting me drop this in. I don't know why it's not letting me drop in the global Dow. It's weird. Here, hold on.
Doesn't want you to.
It really doesn't want me to. I don't know why, but the global Dow, I think, is a good representation because it's not the Mag 7 that Strazza is talking about. Here we go. I got it. Oh, there we go. Throw up that slide 3, and you can see that it's 19% financials.
I wonder how they come up with the weights for this one, because it's not cap weight, right? Based on the largest companies, can't be.
Yeah, no, it's definitely not. It's not the Mag 7. I mean, look at technology, only 13%. It looks a lot like the global 100, to be fair. But when you look at the weightings here, technology is the 3rd largest weighting, barely even cracking the top 5 when you really look at it, which, you know, shows the diversification of all of this. Financials, you know, when you go country by country and you look at the weightings, you're gonna find a lot of financials in a lot of these countries, whether it's in Europe or Latin America or Asia. I mean, Singapore's 50% financials, for example. But a lot of these countries are 30% financials. You know, these are.
I like this. So check this out. It's made up of 150 constituents from around the world, selected by the S&P Dow Jones Index Committee. They do a great job. The 150 companies are selected not just based on size and reputation, but also on their importance to the global economy. So it's the same kind of mandate as the Dow, which does that for the U.S. economy, for our domestic economy. But this index is 5 times larger, 150 companies that they determine or deem as most important to the global economy. So that's how we're getting these weightings.
I don't hate it. You know, I don't hate it. I mean, I feel like we're the only people in the entire world who look at the global Dow. How many times do you hear the global Dow being referenced?
You know what else, JC? It also includes emerging, which is great. This index is superior to something like the S&P Global 100.
But they look exactly the same.
This is what I'm struggling to square the circle. Is how the composition is so different, and yet they look identical.
Well, look at the Dow Jones Industrial Average and look at the S&P 500.
Yes,
the composition is one is price weighted, one is market cap weighted. One has 30 stocks, one has 500 stocks, but they look exactly the same.
How does a chart of Germany or Italy look like large cap tech sector spider?
With no tech in it.
Right. This is it's a global synchronized stock market rally.
That's exactly right. What's up, Rachel? Rachel in the chat, sending love. Right back at you. Right back at you, Rachel.
Miss you.
So I wanted to just discuss the Fab Five. We brought it up last night. Spencer, we had a great conference call last night.
Mm-hmm.
A lot of people showing up last night. You know, in the early days of these conference calls, we would have some people show up live and ask questions and interact, but the majority of people would just watch on their own time in the archive, which we always do. I mean, every single conference call has been archived going back to 2015, which is pretty cool. All the slide decks too, all the videos.
You're saying I would be the only comments in the chat?
There was a time where you dominated that chat, not gonna lie. But you know, really a few years ago, and even to this day, I mean, we're getting a ton of people in there live.
Yeah.
They just can't wait to the archives, which is cool. Like, we have a lot of fund managers. I know this in particular because you know, sometimes for whatever reason, whether it be technology or I might be traveling, I might not upload the video until the following morning.
Yeah.
In which case, I have a series of emails from portfolio managers saying, "JC, what the hell, bro?" Because they get into their desks first thing the following morning and they put that on rather than watching it at night the night before. So I've learned the hard way to get it out as soon as possible. So, you know, I don't get any complaints. Like, they really feel sad about it. You know, they're like all excited. They're going to go into their desk and put on the video, and then it's not there. So, you know, so I haven't skipped out on that in a few years now. I learned that the hard way. So we get it out right away. So anybody interested in watching that, go ahead and check it out. But I did want to go over a few of the things. I know Spencer mentioned that, we're going to wet the beak a little bit. Let's show slide 5, 6, 7, 8, 9, 10. Let's show all of these. I think it's worth showing. These are the Fab Five. We discussed this yesterday. These are 5 groups of stocks, in my opinion, the most important in this cycle. They've shown leadership. You can argue that they're very important in other cycles too, but definitely this one, because as we discussed yesterday, those former highs from late 2021, 2022, where the equally weighted S&P, the equally weighted NASDAQ, materials, financials, healthcare, chemicals, there's so many indexes that are just now getting back to the 21, early 22 highs. So, our focus has been on those that have already exceeded those. And we came into the year 6 months ago or 5 months ago saying, listen, if these Fab Five are above the prior cycle's highs, it's hard to be overly bearish. Put things into context. Any corrections that we get in the market, whether through price or whether through time, any of these divergences come within the context of a longer-term bull market, of which, by the way, Strazza, next week is the 2-year anniversary. Fun fact.
I know.
Fun fact. How are we celebrating that 2-year anniversary? Are you playing a little golf?
I don't know. No plans for that. I had a moment though yesterday on my walk. Tech stocks are getting sold pretty good since late last week.
I like those shorts on the software that we discussed last night. There's a few, some of which are software that we use actually every day, which is kind of funny.
I'm aware of the names. I always giggle when I see them. There's actually 2 set up nice. That
great product too, and you know how much Danny likes to bitch. So the fact that Danny loves it is hilarious. It probably speaks to how good of a product it is. Right. All right. Let's talk about the Fab Five. And Billy making a great point here. Am I worried that the Fab Five are so far above the 21, 22 highs? Yeah, no question. Which again, let's remember, Billy, last night was the monthly charts conference call. So, this is really a longer term look. This is whenever in doubt, zoom out. That was the point of last week. And yes, currently short term, are we extended from those levels? Yeah, a little bit. Sure. But remember, we had these Fab Five 5 months ago, right? And they've held these levels. So from a structural perspective, these are still front and center. Technology, of course, representing 1/3 of the S&P, representing half of the NASDAQ 100, certainly very important sector. Keep going, Spencer. Here we got the broker dealers. We don't have bull markets in financials. We don't have bull markets around here without financials. So of course, the broker dealers index holding above those prior cycles highs. You can keep going, Spencer. Industrials have the highest correlation with the S&P of all of the S&P sectors. So you can argue that this is the most important sector, most definitely. Keep going. Semiconductors, no tech without semis, right? Can't do anything without chips. NVIDIA is about to become the largest company in the world. Of course, semiconductors very important. Holding above those prior cycles highs. And last but not least, throw up the homies. We're seeing consumer discretionary making new 10-year lows relative to the S&P 500. So home builders are holding in there strong. They're definitely showing the most relative strength of consumer discretionary. So these are front and center as well. And then finally, I want to talk about the divergence in the Dow with the industrials making new highs, transports not. For those of you who've studied, history and Market Thompson in the past, you tend to see divergences just like this at major turning points. So I think it's important to put these divergences into context. There are other divergences too. High beta stopped outperforming in December. You've got small caps stopped going up in December. Junk bonds stopped going up in December. Transports never made new highs. So you certainly got a lot of divergences up there. But, when we zoom out, we want to put things into context. And I think these divergences come within the context of a structural bull market that is completing its 2-year anniversary next week. So Mark wants to talk about energy. We talked about energy all last night. There are names that are showing relative strength. There are names that we want to buy. There are names with specific levels that we want to buy breakouts on. All of that listed in our rangefinder app. So Mark, if you're interested in energy, go check those out. They're all in there. And just a little hint, some of the best energy stocks are not headquartered in America. They trade on U.S. exchanges, but they're not headquartered here.
Also, the recording from last night is available. It is in the top of the description. It is pinned to the top of the chat. It is on the screen right now in that QR code. So you have options. I'm just saying. No excuses.
No excuses. Plus, we like to have a lot of fun. So we like to enjoy ourselves around here, right? Who has more fun than us? I mean, seriously.
I don't know of anyone.
Right?
Yeah.
Who has more fun than us? Seriously. California was sick. Are you kidding me? Like, we get to do this kind of stuff, right?
We do a good job with fun.
We do. We are good at fun. You know, I was doing some work because some of us had to work in Sonoma. I couldn't just be, golfing and gallivanting. So I had to do some work when I was in California. So Strazza was like, "Oh, any recommendations of what we should do?" I'm like, "Oh, you can go on the hike here. You can go shopping here. You can have some sparkling wine and caviar here." He's like, "Wait. How do you not lead with champagne, with sparkling wine and caviar?" And I was like, sorry.
That was one of Alfonso's highlights.
Alfonso living the dream.
But also, we're like when we get together like that, I have the 5 guys that I'm working with on a day-to-day basis, but never see in person. So like we do these fun things. It's very intentional, right?
Yeah.
We get together. We have some team building days. The analyst team went to the spa. We had a little bit of a golf day, but we're working out there.
Who ate the most tacos?
You did. Wasn't even close.
Yeah, you did by a mile.
Probably. I get home and I have like all this cash, and I never have cash on me. And my wife's like, "Where did all this cash come from?"
Yeah, she thought
like,
you were going somewhere else.
Taco stand only allows cash. And then she's like, "But did you buy any tacos?" And I was like, "Actually, people were buying me tacos. People were buying me tacos. So I came home with all this cash, and my wife now has all this cash. So that's how that works. You know how.
Funny.
God bless her. God bless her. Can we do a little hot corner before we?
Oh yeah, we can use my hot corner.
Ooh, I got that email this morning. It is hot, baby. It is hot.
Did it go out? It wasn't supposed
So hot right now.
Okay.
Leisure, Strazza, leisure. No?
So we're redoing the way that we do this in our morning note. FTAI today. I do believe that we have the chart. Spencer is our resident cruise line analyst.
Wait, when did I become the guy for like random industry groups?
You do cruise lines, airlines,
and teeny bopper retail,
teeny boppers, and EVs.
Diners. Spencer, did you ever go to the Creekside?
Oh my God, it was incredible.
Okay, good.
Oh my Lord, JC, it was so good.
Good. I'm happy. So Creekside Cafe is a little diner, a little greasy spoon as they call it, right around the corner from the Fairmont, beautiful hotel and spa. Yeah. And I'm like, forget the food at the hotel and spa. Go to the diner. I used to live there. I know it well.
It was the one right across the street.
No, it was around the corner. Yeah,
like around the corner.
Yeah.
So good, Spencer. I get the Spencer seal of approval.
It was incredible. It was just what I needed.
Just shout out Creekside Cafe.
Yeah.
Okay. So Strazza, of this list, you don't like the Lifetime Group? That's a nice little base.
I like the FTAI.
All right, throw it up.
This guy is out here buying shares in the open market. His stock has gone like 5x off its lows from 2022, and he's buying it here. Does that mean anything to you?
How much did he actually buy, though?
You don't see that very often.
You almost never see it. You see him buying 2 years ago when it's at its lows in a 50-60% drawdown. We see that almost every day. This guy's buying new all-time highs. So what's going on at this company?
$500,000. Martin Tuckman.
It's not nothing. It's really not. $500,000 is not piker.
No, it's not. That's a legit purchase, I suppose. I mean, and think about the market capitalization of this company.
Yeah.
So we're looking at a $9 billion company. So, $500,000 in stock isn't nothing.
So that stood out for sure. And then LTH, you're right. It does have a nice base. I don't think we brought the chart.
Throw up slide. I got it. Throw up slide 2 there, Spencer.
This is some gym company, I'm guessing.
Is it?
Spencer, where's our leisure analyst?
Well, I'm here. Yes, what's up? I'm talking to Larry.
Not so much at gyms.
Oh,
Yeah, there's a Lifetime around the corner from my house.
This is
Health, fitness, and wellness experiences.
I saw a video. I think Ryan
Locked.
Lochte was there the other week. You guys know who that is? No? Okay.
Swimmer?
Never mind.
the crazy Olympic swimmer.
Yeah.
These Olympic swimmers like to party.
Yeah,
That's all I know.
I know that this is like a very bougie gym.
Michael Phelps set a bad example. I've never heard of it.
It's very bougie.
Yeah,
It's a bougie gym, Lifetime Group, huh?
Yeah, Lifetime Fitness.
Nice base.
Spencer, you go to Planet Fitness?
I used to no, I was never a member of Planet Fitness.
Spencer's more of a Pilates kind of guy, you know.
Yeah, I see that.
Yeah, definitely Pilates.
What's the other one?
He does the Thai bow.
No, man.
I went to a Planet Fitness back in the day.
I would go to the one that had the basketball. What was that one? They had the basketball courts?
YMCA is the best gyms. If you like
YMCA.
activities. Yeah, if you like activities, you go to a nice YMCA. If you live in a nice town, dude, that's the hack. Don't
All
worry.
right, Chad agrees with me. Lifetime is a very nice gym.
All right.
Yeah.
Nice base. I'm more interested in the base than the gym, but you know.
All about that base. All right, that's great.
Larry in the house today, huh? Is Larry a CMT yet? Has he finished that?
I don't know. We'll have to
I don't
ask
know,
him.
but real fast,
He's
you
a
guys, if you want the
CPA,
hot
so
corner,
you guys can dork out with like spreadsheets and accounting and stuff.
He's got a great skill set.
Larry, yeah, definitely. What's up, Spencer?
no, I was going to say, if you want the hot corner, get the hot corner. Comes out free every day. We send it out in the mornings. There's the QR code. The link is also in the description where it says free research.
And special announcement
Oh,
now comes with one chart a day.
hey now.
New rule.
New rule.
Charts included.
The fact that we were sending an email without a chart.
Well, that's how the decision was made. It was like, would a
I have
chart?
a chart in there.
Okay, we could easily do that.
If there's anything that we're good at is having fun and including charts in our emails.
Yeah, so we're going to highlight a chart every day, which will be fun. A lot of times those charts are going to look disgusting and ugly and something that we're not going to be buying, but that's going to prove a point as well.
Yeah, no, and that's a good point that Strazza is making. In a lot of these cases, these CEOs and insiders are stepping in at what they consider really cheap prices. When they do so in size, it really stands out. When they do so with almost no money and they're just trying to save face, that's probably not a good thing. But when they're coming in with size, and like Strazza said, usually they're not like this chart that we looked at today that's making new all-time highs. Usually they're bottom fishing. They're not chasing.
And I've been going through because we had so many good ones in 2022 where some of these guys just came out and picked the bottom. And we see this every cycle. So we're going back. We're making a little Insiders Hall of Fame.
Ooh, I like that. Insiders Hall of Fame.
Some of the real money purchases that were made over the past few years.
Like Dell.
Dell was great.
Adobe.
Baker Bros.
Yeah.
Touch is great. So.
Yep.
All right. You're bringing on Larry?
Bring him on. You see what
AKA,
happens, Larry? Do you see what happens?
AKA hostile charts.
Bring him in.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Yo,
What up, Larry?
how we doing?
What's up, my man?
How we doing?
How what are you looking more at these days? Spreadsheets or charts?
Charts for sure. Yeah,
Is
I
it
mean,
closer
I probably look at more individual charts for sure. I probably spend more time in spreadsheets, unfortunately, but that ratio will shift over time. I think it's the Excel to chart ratio is in a downtrend, so it's a good thing.
Ooh, I like that. I like that.
Yeah,
Are
so
you
it's a good
like
thing to
Steve
see.
Strazza? Are you like Steve, where you are a gentleman on the streets but a freak in the spreadsheets? Are you one of those?
Plead the fifth, honestly.
I was just
Fifth, FIF, fifth.
bragging
kinda
about
funny.
Larry. And you know that I feel this way about you because we've talked about it over the years. But you have, I think, the best skill set for markets because you started as a CPA, a financial statements person. You understand the balance sheet and the P&L and the cash flow and all that important stuff, right? And you tried that. And then you found, there's got to be something else needed for this process. And then you tacked on technical analysis, right? Started studying for your CMT on top of that. And it gives you both because you could speak the fundamental language. You could understand what everybody's talking about out here, but then you go back to the trend and let that kind of govern your decisions. So I think this skill set of combining the CPA and CMT or combining some sort of specialty or expertise in accounting plus some sort of expertise in technicals, there's no better combo. So good for you, buddy. You want to talk about
it?
And
I think he's only saying that because he has the same skill set, so he wants to make him.
I'm complimenting myself indirectly as well. Thank you,
Strazza's like talking to himself. He's like, I have the best skill set. See what he did there, Larry? You see that?
Tell me about experience with this skill set in the market.
Yeah. So the CPA, obviously, right? You graduate college, and I was first generation, paid for it myself. So taking a risk was going to college, and so then you want something low risk. So I became an auditor. And then from that experience, right, you write the financial statements, you analyze. I've probably consulted with 25 plus businesses at this point, and you're looking at what fundamentals people are driving for their investment views. You're looking at that from the actual internals of the business and how can we, create operation leverage. You're looking at companies that are maybe undervalued, and then your acquisition team within that company might be looking for, I don't know, an integration of that company into your books. And you're like, okay, well, it's trading at this current revenue, right? It's trading at this current EBITDA. What can we do when we bring that into our company to, right, create operation leverage, which will then over time create value for our company? And that stuff is great. And I think, right, you'll hear David Lundgren talk about it. You'll hear JC talk about it with monthly charts. I think over long periods of time, those things matter, right? You can look at a long-term trend of EPS versus stock returns, pretty well correlated. The problem is the when, which is really when is how you make money in the market. And it's also how you keep yourself grounded in a discipline without having all this false hubris. I work for a company right now, and we think it's us. And then I just look at the sector as a whole, and I'm like, no, we're just trading with the sector of the market. What happens is people create this overconfidence instead of just analyzing a trend or understanding the market regime. And so then you get these cycles because people then overspend on CapEx because they think something big's coming in the pipeline, when it's just like, no, the reason you guys were growing is because you weren't spending in CapEx and you were creating cash flow. So there's just a bunch of intricacies that I think is helpful, but that stuff's, I've moved on to technicals. JC asked about the CMT. I just have to get my sponsorships, which is on my list to do within the next couple weeks. So
David Lundgren always says, zoom out on a chart and what you see is the long-term fundamentals of this business, right? And that's really so true. So what we can do, knowing financial statements or understanding fundamentals in a way, you ever look at a chart and you think to yourself, that's strange. This business should be in an uptrend, but it's not.
Yeah, and I would say the opposite more often. I would say this business doesn't look good, or I don't understand it, and then it's in a strong uptrend. And I'm like, I don't get this, right? I would say that for the company I currently work for, I kind of evaluated them from a fundamental perspective, then a technical perspective. And, the company's grown really well the past couple of years, but you hop onto a trend and the trend sees it before maybe the fundamentals follow it. Now you're hearing about the electrification of the grid, and now you're hearing about the infrastructure spend, but those uptrends have been in place for 3-4 years.
So the market sniffed it out for your business before people were even talking about it internally or really even understood it internally.
Exactly.
Tough to beat the market. Tough to beat price.
It is. Yeah.
But sometimes I'll look and I'll say, this is one I'm interested in. I like what's going on here. I like the fundamentals, but the chart doesn't support me being long this stock. And I'll wait. And eventually it might happen. And I can say, oh, both things are lining up. Now I can check both boxes. I'm in.
Yep. Yeah. And I would say too, if your discipline is very fundamentally based, you almost have to have a conviction that I think hurts you when you're a technical trader, because there's a conviction that comes along, and we've all seen it before, maybe Alibaba or PayPal. You believe in the fundamentals of the company, and then you become too stubborn, right? And when I evaluated my trading positions, I was holding losses too long. It took a book like Stock Market Wizards to really understand, like, let the winners run, trim the losses quickly, move on, and just kind of have that process that occurs over time. And that's what really helped me, was taking a step back and, realizing I don't know everything. Like, I have a sign on my wall right here that says, "You're not that smart. It's just a bull market." It's just like, if you keep that perspective, losses stay small and you're able to continue to play the game, which there's a difference between evaluating businesses and making money in the market. And that's the piece I'm kind of on now, is making money in the market.
You could evaluate a business the right way, but if the market doesn't agree with the way that you evaluated that business, you're screwed. Doesn't help you, right?
Yep.
I see people, and there are some people who do tremendous, pure fundamental analysis, even on Twitter, right, that I follow, who I think are great. But I'm talking purists, right? They're buying downtrends, they're catching falling knives, and I can see them banging their heads against the wall. This earnings season, I saw some tweets out there that were like, don't completely ignore, the reaction to earnings and the price action for this, blah, blah, blah. The story doesn't change. We're so bullish this name. I'm looking at it. It's at new all-time lows. And he's saying, ignore the price action from earnings. What? Ignore the fact that the market doesn't agree with you. They fall into this stubbornness, right? And they become dogmatic about their positions, and they just keep averaging down. And that's a really good way to hurt yourself. And really, the game could end sooner than it should for those people, because you're going to blow yourself out acting that way. You have to pay attention to technicals, even if just a tiny bit, when it comes to like executing in a fundamental idea.
Yeah.
And how about the fact that, when we talk about technicals, a lot of what we're describing is price itself. And if at the end of the day, the only thing that's going to pay us is the actual price of the assets.
That's right.
Whether we agree that price is right or wrong doesn't even matter, right? If the only way to get paid is to sell things at higher prices than where we buy them, then shouldn't the analysis both begin and end with the study of price and certain price derivatives like momentum and relative strength and things like that? That's how I see it.
Yeah, to ignore price is pretty ignorant.
Yeah. I would say too, it's almost like a philosophy or religion to some degree, in terms of like valuation specialists. They almost have a predisposition to think that the market is just and fair. And so what they're doing is they're saying, hey, here's the value of something. The market over time will become just, or it'll become fair. And we know we don't live in a fair and just world. So to me, it's just you're banging your head against the wall, like you said, and you're fighting. At the end of the day, you're fighting a trend and you're fighting markets, which is something I don't want to do, right? I learned that the hard way. I was just out of college and COVID hit, and I thought all these companies were doing really well. Oh, I'll buy all these lows. And I have in one of my Fidelity accounts some 80% losses that I can't even sell now because the company's got delisted SPAC reasons, right? So I think it's just one of those things where you learn one way or another to trust price. So that's what I'm trying to do here.
All right, Larry, let's trust that price. You brought a few charts here with you. Where do you want to start?
We start with that SPY chart. I think, right, just zooming in a little bit, just looking at the current tactical positioning of the market. It's kind of messy. I think Strazza said it this morning in terms of breadth being meh, right? Strong uptrend. This is a year-to-date daily candle chart. I think, right, we're strong uptrend. We had this base. We tried to break out, right? RSI didn't get above 70. So not really follow through that we wanted to see. Kind of came back down, kind of came to levels. I posted something last week. SPY was at support where we had, tactical breadth, just using the S&P percent above the 20-day. Tactical breadth was at a spot where we would bounce, right? But what we need to see now is we need to see that follow through. And if we don't see it, right, we're just trading in a messy sideways range within the context, like you were saying earlier, JC, of a bull market. So this is step one, like identify the current market situation. Currently, I see it's a little messy from a tactical perspective. Longer term, you're in an uptrend. So the next step then for me is like, all right, look at relative leadership, because if I believe this is going to resolve higher, I want to look at things that are making 3-month highs, 1-month highs relative to the S&P 500, because those might be the stocks that then lead us out of this continuation pattern. Or, right, there's so many options. We could have a case where the S&P 500 is pretty tech heavy, and right now tech has about 43% of its components trading above its 20-day. So if tech kind of chops sideways or, trickles down a little bit here, which you guys showed some charts last night. If you look at some software names, the top names don't look that great to some degree, especially the software heavy companies that are now, $500, $800 billion companies. And so what we could see is maybe some stock pickers market where you have those, but you're going to have to look internally to get that. You're not just going to see it from a broad-based perspective. So to me, it's just a little messy right now.
Wouldn't you argue haven't we been in one of those, Haven't we been in an environment for most of the year, at least the last 3-4 months, where it's not an everything goes up market like we had in November and December, right?
Sure. I would say that, right, tech, NVIDIA doing so well. I mean, you still saw NY FANG index traded all-time highs like 2 weeks ago. But I think what you're seeing now is you're seeing stocks kind of get to those high levels and either have RSI divergences, which you're seeing here on this daily, or you're seeing like on the weekly chart, you're seeing like RSI failure swings to where we went above 70 and then now we're not getting back above 70. So I think it's messy. I think also, like you're saying, JC, you're not seeing from a breadth perspective, you're not seeing the other areas of the market necessarily overly participate from a broad view. You're just seeing strength in pockets. I think there's only 5 sectors with components greater than 50% above the 20-day. So I don't know if it's rotation or if it's just sideways trending. Then that's kind of what I'm trying to evaluate.
You like the Coinbase, I see.
Haha. Are we going to skip right to the Coinbase? I wanted to talk about his small brain economic chart. I want to know what that means.
Yeah, so small brain is just in terms of, I think, kind of back to the fundamental CPA route is, I think when you tell someone the CPA, they think you're a big brain. And I think the big brain is what hurts people in the markets. And so to me, it's just, I want to keep myself humble, and I'm just looking at charts and trying to understand them. Like this to me is, you have home builders, broker dealers, technology, industrials, and then SMH. Or you can kind of see the bottom 4 kind of trading sideways a little bit, right? They're not making new highs the way semiconductors did. So you're seeing mixed messages under the surface where, like you were saying, all this year that we've had, right? We've had kind of a mixed market, but guess what we had? We had these economic sensitive areas kind of going up. You can see the year-to-date returns. But the past month and a half to 2 months, we've kind of seen these areas diverge from the S&P 500, plus the divergences in breadth, plus the divergences in momentum. And what are we also seeing? We're seeing the heavier companies, right? The software mega cap names kind of trickle down a little bit. So to me, it's caution. I'm not adding new longs right here to these positions, broad market based. I'm just looking more tactical into positions. The next chart, Visa, I think just symbolizes what I'm seeing on a lot of individual charts. I went through 1,000 charts this weekend at least. And this is what I'm seeing. I'm seeing the base breakouts looked great, right? You had solid risk reward to take, but then in the way of it following through, when we had that, the new highs, we didn't have confirmation from breadth on the weekly chart. And we started to see some of these companies kind of roll a little bit. Another company that looks like this is CrowdStrike. And I think those were the names that were breaking out and leading us when we were making those new highs. And now we just don't have those names doing the same thing. And so I think it just could be messy short term. I think there's also we saw it, right? We saw sentiment shift so quickly one direction, which is where I think people are anticipating trend to resume too quickly. This could just be a summer where we need to be at the beach, JC.
Yeah.
I'm here. It's pretty awesome.
Yeah. So I don't see a problem with that. So from there, right, look at relative strength. Look at the leadership areas that used to do well or are making new 3-time highs. There's a couple charts that I sent over. I kind of have an affinity with these industrial names nobody cares about, these chemical names nobody cares about, these material names nobody cares about. These bases are nuts. And you'll never see this chart posted on Twitter, right? I think StockTwits does the trends with no friends. And I really like that approach because these are my best trade. My best trades are the stocks that no one's watching. Everyone saw energy breakout. What did it do? It failed. Everyone saw gold try to break out for 3 years. What did it do? It just now broke out. Everyone was anticipating yields to break out. Now they're kind of trending sideways. So it's just, I think you have that positioning issue there. And then you just have an area underneath the surface here where, I don't know, Brian Shannon kind of mentioned the failed breakouts. Well, I think the failed breakouts come more in those large cap names where you have hedge funds that are trying to get positioning in stocks, whereas these mid cap names, they can't even touch them. So you have a better chance of getting cleaner setups. So I like a lot of those relative strength leaders in those materials area, the industrials area, because I think that infrastructure spend under either president is gonna be strong.
I'm with you.
We call some of these Eddie Elfenbein names, right? These are just boring stocks, nothing sexy. That's a tow truck company in Ohio, or like, right? Just random WD-40,
Yeah, WD-40 was a winner. That stock's awesome. I love that company.
Yeah.
These are the types of companies that Larry's talking about. Some of these mid-cap industrials and materials, like you're saying,
And I work for one, right? So I've
Larry,
seen it.
Hold on. Is what I'm hearing, hey, if big cap tech or software is under pressure, there are other groups that are working. Look there. Is that basically what you're saying?
Exactly. And I wouldn't even, classifying groups, like if you run a new 3-month high ETF, you're getting very minimal. So I wouldn't even say it's a groups per se. You have, right, insurance companies, which I own. You have aerospace and defense look great. But I would say beyond that, I'm looking at individual names to gain positioning in. I'm a little bit lighter right now in my positioning just because when trend kind of gets lighter, I just take some positioning off because I don't want it to see some of those failed breakouts that we saw. CrowdStrike if you were buying that breakout, you kind of got slammed. And so I'm just not trying to get positioning in these names, anticipating these breakouts because we could trade sideways through 3 to 4 weeks, months, right? June is not typically like a gangbusters month. So I just think seasonality also kind of prepares you for a little slop.
Sell in May. There's golf to play.
There you go. It's funny. It's funny.
All right. Can we talk about Coinbase now, please?
Yeah.
Throw it up.
I don't know if I brought that chart, but
we brought the Bitcoin.
Yeah, I brought the Bitcoin. Coinbase looks good. I like Coinbase. What's it against? 200? Oh yeah, Bitcoin. This chart. I posted this chart on StockTwits, and then I posted it on Twitter, and just the sentiment read for Bitcoin is still what it was 1,000% ago, which is just, to me, is hilarious. You get the same post. I saw something yesterday. It's like, what happened to Berkshire is going to happen to this, but it's going to be for real, right? It's like, this is going to zero. And I've seen these clean levels before, and I've also seen these clean levels when the market's messy, and then Bitcoin will lead the market and kind of help you resolve that way in the direction. So I think Bitcoin could probably be a tell to some degree if those software areas, because what were we considering cryptos for a while? Software type companies, right? And so you're kind of seeing that divergence, which is interesting. We normally don't see. We haven't seen that divergence as strong between like software and crypto.
I think that's the right way to be thinking right now. Like since last week, you should be asking yourself, like, who's right here? Because I don't think these are going to be a bunch of nasty tops in software, and they're going to follow through lower. An environment where Bitcoin is resolving this coil higher. Those two things don't add up. I think they have to keep moving in the same direction.
Yeah. So it'd be interesting to see kind of how that resolves. But I'm long Bitcoin.
Spencer, throw up slide 2. There's that Coinbase that Strazza wanted to talk about. This is a zoomed out version that we discussed last night in the conference call. I think it's a good chart.
Yeah, I really like it. I really like it. I think even if you don't need to add anything to the chart, right? Price looks great. But if you even just look at RSI staying above that 50 regime, and it still has that relative strength relative to the S&P 500. And I think that's just something that's interesting underneath the surface. So I just think relative strength here is just where you have to be doing your work, is just running some relative strength scans, pulling stocks that are outperforming on a relative basis. And it's interesting because it's not a lot of tech names anymore like it was earlier in the year. So that's why I think that market cap heavy index, market weight index might trade sideways, but underneath the surface, you could have individual names doing well still. So it's just a selective market, which is okay when you look at charts.
So it would be the opposite of what we saw at the end of the cycle in 2021.
Yeah.
Right.
By the way, we haven't seen Coinbase get oversold on either a daily or a weekly RSI since 22.
Yeah, it looks great. It's been really
Actually,
resilient.
and it's coiling right now, right? Like it's in a pretty tight range. So I'm waiting for this to resolve higher here. So
We want to be long above.
There you go. There you go.
That's the way we're playing. Sean and I talked about this on the Flow Show yesterday. We're eyeing a bull call spread. We like it above VWAP, but we want that confirmation first. We want to know that buyers are in control of the short-term trend before we enter a trade like that. And I think that VWAP set at the year-to-date highs gets that done.
And I think it's interesting what you said there. You want the buyers to be in control. Another way of saying that is that you want the longs to be profitable. You know, one thing that we know about bull markets, one thing we know about uptrends is that shareholders are rewarded for owning the stock or being long the market or whatever it is. So, you know, think of it like that also.
Hey, if they're annoyingly priced, you could always sell puts. Just saying.
Coin options always annoyingly priced. I don't know about annoyingly priced. Why? What is annoying about it, Dawson?
They are annoying. I would have.
But annoying how?
I'll tell you how. I would have traded more calls in this one over the years, but not only is it a high price stock, so it's going to suck up a bunch of your margin, but it's also super high implied volatility name. So the long calls are just juiced if you're going to do it that way.
Yeah, but that would just be dumb. So it just because I think it's dumb to spend too much money on expensive calls, especially in a name like this where the calls that are way out of the money are so juiced up. You can just sell those to pay for the near-term calls.
That's what I'm saying.
Oh,
sell something. Because sell puts too.
Yeah, but in these crypto names like Coinbase, Mara, all of these, the calls that are crazy out of the money are super juiced up. So you could sell those all day long because you're putting yourself in a position, and I'm just making up the numbers here, where in a call option, when you buy a call, you can have unlimited upside. But if you sell way out of the money calls, you no longer have that unlimited upside and you can only make 8 times your money or 10 times your money. I still find that incredibly attractive. Right? You know what I mean? Like it's not unlimited upside, but damn, 8x, that's pretty damn good. Right? That's how I think about it.
If we take this
a lot quicker.
If we take this VWAP at the open here, which I think we're gonna, I will be entering into a very short-term risk reversal. I think we're getting this leg up. I agree with Brian Shannon. I think it's go time, and Coinbase is the vehicle I want. I love what everybody's saying in the chat. Also, there's a question for you in the chat, Larry from Dawson. I think this is a good question. Do you smash beers?
I'm not a crazy beer guy. More of a tequila drinker, to be honest, but pretty
those tequila seltzers.
Yeah, tequila. I mean, beer just upsets my stomach. I'm not trying to be bloated all day. You know, I like wine too, but I'm not like crazy about it. I'm not like a crazy drinker, but
so you heard me here, Larry,
I did get some gold recently.
So snap, son!
Yeah. Dude, it was all great. Everything was great. Yeah, Savannah for St. Patrick's Day is pretty insane. So
you went to Savannah for St. Patty's for your bachelor party?
Yeah.
Nice.
Dude, I was deleting beers that day. It was a bad day to be a beer for sure. So
where do they have the parade? Is it like right on River Street? How do they do it?
It's right on River Street, and they extend the open container street like 2 miles. So we walked like 15,000 steps. We just walking around having a blast. So
what he's saying is
I love that you were counting your steps on your fucking bachelor party.
Savannah is one of those.
I just had a watch. I didn't count them.
Savannah is one of those really cool towns. It's like Key West and the place in New Orleans,
Bourbon Street.
Yeah, where there's no open container laws, so people are just walking.
Like the plaza in Sonoma. As long as you're in the square, you can drink as much as you want.
And I think more and more towns are doing that, where they're zoning like a specific area, like, hey, y'all can go have fun here.
This is where you get drunk. This is where you don't.
Right.
And honestly, it worked really well because then like police are able to focus on other things versus like a guy carrying a beer outside. So you actually, it feels safer, to be 100% honest. So yeah, it's interesting, but
we're pioneers of that.
So.
We're the pioneers. We're the pioneers of the open container laws.
I dig it.
Wait, Larry, did you check out Mrs. Wilkes' dining room by chance?
Did not. Had some Cuban though. There's this place called the Cuban Window. Oh,
Cuban
guy
and
hooked me up.
You guys are
me up.
It's called a ventanita.
There we go.
That means a window. I know this.
Little window. Little
Nice.
window.
The guy goes, he says, early night or late night? I was like, late night. He says, I'll hook you up. Just gave me all this food. It's delicious. I came back a third of fried plantain, honestly. It's so good. So
well, grease and fried foods are actually great for hangovers.
All right.
It's a fact, you know.
That's funny.
Greasy is food you can eat.
Yeah.
Larry, while we have you on, you know, you're you know, how young are you?
Young guy.
29.
29. All right. So you're almost 30. So you're not a baby no more. So
not anymore.
But you're a pretty strict follower of the Perlman program. You want to tell the folks a little bit about, you know, how you handle yourself? You're not always getting loaded in Savannah. That was a special occasion. What is a normal day like?
Yeah. So normal day, honestly, it's just like the markets. I try to keep it simple. So it's just, I eat real foods. I try to move a lot and I go to bed on time. Like those are my three. That's really just it. So a lot of real food is good for you. I'm more of a fruit guy than Perlman recommends, but also I'm moving a little bit more and I'm a little bit younger. So I would just say for me, it helps keep a clear mind, especially when it comes to the market. I think it's just easier to, you know, you're not tired, you're not bogged down, you're not looking to get your anger or frustration out in the market. Like I just did 10 minutes of walking lunges nonstop. I'm beat. I'm not worried about trying to fulfill my destiny in the market this morning. Like my ass is sore. So like, I'm not worried about all these other things that people are concerned with. And it just allows me to kind of zoom in on my own approach. But I've been doing it my whole life and it's just something I never want to get out of. I just think it's an important component of, right? If you're preaching long-term charts, long-term trends, right? You have to be there in order to capture the value that's going to be there in the future. So that's just kind of how I think about it. Yeah. So it's good. It's good stuff, but it's enjoyable.
Quite literally, his ass is sore after those lunges. But,
Literally. So and it just prevents me from, you know, posting, you know, BS comments on people's trades. It's like I got enough stuff to worry about today. I need to go stretch. Like I don't have time to concern myself with all these other people and things. But
nice.
Larry's got
the other thing I'm working on, just real quick, just plug it real quick. I'm starting my blog now that I got married. So start writing. So it's called Larry's Homework. So shout out to, I see a couple things in the group chat. So
Larry's Homework? That's fantastic.
Yeah. So yeah, I'll be posting something probably next week. I have a bachelor party in Michigan this weekend, but I'll start writing. I'm trying to do once a week. Just get some ideas out there.
So many
where in Michigan?
parties.
Wait, where in Michigan?
South Haven. So I'll be on the west side.
Okay.
So just golfing. I think we're doing 36 holes. We'll see how many holes we get done. So
have fun.
It'll be great. Yeah, it'll be good.
I remember I think I'm done with bachelor parties. I think my friends I think they're all married. I'm done.
I have a couple this year, but I'm on the tail end. See, he's right at that prime age.
He's in that prime, in that late 20s.
Dude, that's all my vacation time. All my free time is bachelor parties and then weddings. So
I was at a wedding this weekend. Let me tell you, I mean, they just do things the right way down here. It was 15 minutes. It was on the beach. They brought us waters. Everything was fantastic. And then it was over and everybody's out. There was like 30 people there. Best wedding I've ever been to.
Yeah,
nice.
I like them. Quick and efficient. Let's get to the party. All right.
Quick and dirty.
Larry, congratulations for real on the wedding. Take your time with the kids would be my advice.
Got it.
Take your time.
Noted.
No rush.
Noted. Yeah, we're not trying to rush it. So
yeah,
it's good.
No rush. We'll get you back on the show soon. Thank you, Larry.
Thanks a lot, Larry.
Yeah, I appreciate it. See you guys.
All right.
Spencer, I'm glad that we had that little conversation with Larry. Bring Perlman on so we can dive deeper into
I was looking, it's been a minute since we've had Perlman on the show.
Yeah, get him on. Let's talk about, because it's really important for all of us, everybody out there listening, for Larry, myself, Spencer, Strazza, all of us, putting your body and your mind right and in a position to succeed starts there.
JC, I mean, we talk about Phil enough on this show. We're all always thinking about him. He should be on here like once a week for 5 minutes, just reminding everybody to like do that thing. Seriously.
True.
We should get him like a weekly slot. Just 5-10 minutes. Come on.
Yeah, it's been, believe it or not, it's been 6 months since we've had Phil on the show.
He misses
I know.
Unacceptable, Spencer. I blame you.
He misses us. He wants to play golf with us, JC. Doesn't that feels nice? He doesn't even like golf. He just wants to hang out with us.
I don't really like golf either. I just want to hang out too. I mean, I don't hate golf.
Have fun.
If I never play golf ever again for the rest of my life, I'll be fine.
Did you have fun when we played last year? You had a good time.
Yeah. I'll hit some balls, some good ones, some bad ones, eat some dogs.
I have a story to tell. Ready for this?
Yes.
It's making me sad. Good friend, client of ours, probably he's your age. He's got too much time on his hands. He doesn't quite know what he's doing. He is bothered by the fact that maybe he sold NVIDIA last year, this time, and he's still counting how much money he lost by not being in it. And what he's doing now is revenge trading with lots of money. And I'm getting texts with images of his margin calls, and I'm saying, buddy, stop. And he can't stop himself. It's like an addiction. And because he's trying to make the money back in NVIDIA as opposed to just making money. Yes, it's a lot of NVIDIA. It's too much NVIDIA, but he's also just looking for like the home run, like some sort of like day trade home run. They're trading these 0 DTEs. They're doing crazy stuff. It's getting margin called. I'm saying liquidate. He's putting more money in, and it's actually really bad. It's affecting his life in a way that his friends are worried. He wasn't golfing with us this week and breaking up with his girlfriend. He's not going to work. Like, he's depressed over it. It's really, really bad. These are the things that happen if you don't manage your risk and you don't keep your mind right. He got set off by a trade that maybe didn't go his way a year ago, and it's still losing him money today, 12 months later. So revenge trading is real. It's awful, and it sucks to see it, but anybody can fall into this trap. This is a super bright guy, business owner, fantastic. He's an older man, right? He's not a kid. But he can't figure out how to stop himself right now. It basically needs an intervention. And I think we're going to try and do that today. But these things happen. They can happen to anybody. And a lot of times, from my experience, it happens to the smart guys, not the dumb guys. Larry comes on and says, I want to keep it small brain, right? It's your doctors or your lawyers or your chiropractors or some sort of business owner who's sitting around. He's already been successful. He thinks he's smart. He thinks he can conquer the market too because he conquered something else successfully in his life. And boy, oh boy, can these people get burned. And at that point, they tend to have enough money that they can really hurt themselves. Yeah. Right? Blow up your account when you're 20. I told Fonz the other day, I said, go for it. Thinking about a trade that maybe was too big for him. I said, yeah, go blow up now. That would be great. He was looking at me like he wanted to kill me, but I meant it. I meant it. And
your friend, the story about your friend, we've seen that. Maybe you and I haven't been that extreme, but we have sensed some sort of that feeling, particularly early on. We've all been there, some capacity or another. To wait till you have a ton of money to get there is probably the worst thing that can happen. We see this all the time on Twitter. People, perma bears, they just keep, it's going to come down any day now. It's going to come down any day now. And markets are literally designed to go up over time, right? They buy more of the best companies and they kick out the worst companies. So, if you're always fighting that, like as a strategy, you're always going to, you're going to be right once every 10 years, maybe, that's no good. We see it all the time.
Yeah. It's why sometimes you hear like the worst thing that can happen is you have a huge winner, right off the bat. Because then A, you think you're smarter than you are. And B, you try to do it again, but you can't. Right.
Yeah.
So, humility is everything, and discipline. Yep.
Yeah. I'll let you guys know what happens, but we're going to get lunch today. I told him, I said, come hang out. Just come spend the day with me. Come pull up a chair, right? And I'll show you what I do. Right?
It's a good idea.
All right, well, let's talk markets here as we are 6 minutes into the open. I didn't have much in the way of headlines today. Maybe let's bring up the Intel chart, Fonz, if you have the Intel. I don't know if you guys care about this. Intel is maybe you don't. Intel is launching their version of AI chips. There's this big chip conference happening overseas.
So they know
now
what AI is. Okay.
But a cheaper alternative, right?
What?
It's a cheaper alternative to the NVIDIAs of the world. Chips.
I heard AMD is the cheaper alternative to NVIDIA. So this is going to become a pretty crap market.
That too.
It's not going to be Intel. Sorry, Intel. These guys, they have missed so many times. I don't even know how they recover at this point. The government is saving these guys. It's really embarrassing. This is
why, because they have government contracts and stuff.
Yeah.
They're giving them subsidies, helping them build factories and stuff. It's really pathetic. So I'll be right back.
Why are transports randomly doing well today? Are seeing Old Dominion, seeing XPO Logistics? That's more of an.
I mean, transports. The Dow Jones Transportation Average is up 1/3%. So I mean, it's kind of just churning around. Let's go. Let's go over the markets quickly. We've got the Dow down 75 points. 38,500. S&P down 1/4%, 5270. NASDAQ down 1/4%, 16,800. Russell 2000 down 0.5%, 2,060. Crude oil down 1.5%, down a little bit above 73. Gold down 0.5%, 2360 basically. Silver down 2.25%, back above 30. However, bonds slightly down as yields slightly up. Bitcoin down 625 points, 69,260 for the old BTC. And then checking in on India, we've got an ETF, INDY. So this is INDY. This is the India 50 ETF. It's down 6.6%. If we look at PIN, this is the Invesco India ETF, down 7%. And EPI, this is the Wisdom Tree ETF of India, down 8.5%. So the slaughtering continues out in India. Shout out to all the homies in Mumbai. Absolutely love Mumbai. Great food, great people.
I don't know what's in the INDY, and I don't know what kind of arbitrage there is between that and the Indian stock market. But I like this INDY chart. It's funny how this works out, JC. It is right at support from a few months ago.
Yeah, right? INDY, a lot of banks. You've got over 1/3 of the entire index is banks. Nothing is even remotely close. So you got HDFC Bank, you got ICICI, you got State Bank of India. Then you got Reliance. Reliance is a big company, obviously. So you got plenty of energy exposure. Energy is the second largest component in India, as a matter of fact. You got 6.5% basic materials, 10% cyclicals, 12% technology. So tech is a fraction in India of what it is here in the United States, and the banking exposure is heavy.
Yeah, I mean, look, getting killed, like you said off the top. How often do you wake up and see India down 6%? But here it is, right at support, right there. So
yeah,
key level is coming into play again,
guys. JC, where's your head at on the Roaring Kitty stuff this time around? I just closed my AMC position for pretty much a nothing.
First of all, I love that you were trading AMC. What do I think about the Roaring Kitty? I think it's hilarious that he was tweeting at me years ago, asking my opinion on GameStop. I wish I had answered him and become friends with him. I'm one of the few people he follows, and he's asking about GameStop, and I'm pretty sure I just ignored it because obviously I can't just answer every tweet. So that's a bummer. I think it's funny that the first time around it was like the retail investor against the big wealthy institutions, and now he's a big wealthy institution.
So a couple questions I have. The first one that everyone's asking is it even really him? Sure. Okay. We don't know. Second one is, whose money is this?
His.
No, it's not, Spencer. Do the math. It's not his money. Sorry. He made a lot of money on GameStop a few years ago. He's not worth hundreds of millions of dollars. He's backed by somebody. They're smart money. 100%. If there's one thing I know about this, he's backed by a fund. I don't know if it's a family office, if it's an institution that we all know. There's somebody else's money involved in this. I don't think this ends well. I think if it is him, that it's crazy for him to be out here doing this. I think not only do the regulators want to absolutely fry this guy, but the whole street is against him. E-Trade and Morgan Stanley want to shut him down. He's showing that he's still long. Maybe they didn't let him close out yesterday. Maybe that's why he's still long.
For the record, the blockchain fixes this.
Yeah. Steve, so I think the market tells you all you need to know. GameStop got killed yesterday.
I don't want to be involved in this situation, is what I'm saying. And you're right, Spencer. The market action, it seems like
it was down 25% yesterday, open to close.
It seems like everybody's kind of over this. So that I'm out of AMC. I thought, okay, I'll take a runner on this. It was coiled up nice. It looked like a good idea, but I just don't want to be involved. This is not a game that I want to play. And I don't think it ends well. I don't think if this is Roaring Kitty doing this, I think he's in trouble. Listen, people will say, oh, what's he doing? He's just tweeting memes. That's not against any securities law. They will make a new law.
Yeah.
And what he did will be against it, right?
I have friends that were working at some of these crypto banks, and they tell me to this day they did nothing wrong. They didn't break any laws. They didn't, fall below any requirements. They were fully capitalized, but the government wanted to shut them down, and they did, and there's nothing they could do about it.
That's right.
And they were out to get them.
And now this is the position that Roaring Kitty finds himself in. Why would he do this, right? I don't care if you're Elon Musk or if you're Coinbase or if you're Roaring Kitty. You don't want to fight with the SEC. This is not an agency that you want, to go to war with. And anybody
they'll get you, and then they'll ask questions later.
Yeah. I think they're going to screw this guy. And if he really is long all this stuff, and he's going to lock up his account and not let him get out.
Think about it. The SEC will come get you. It'll completely screw you over. And then years from now, Congress will reprimand the SEC for overstepping their bounds or whatever. And but by then it's too late. There's nothing you can do about it. You got screwed over anyway.
Yep.
So,
and guess what else? Spencer, he doesn't have $150 million. I don't care how much GameStop stock went up back in the day.
You don't know. Okay. I'm just saying you don't know. I am hanging my hat on the reaction yesterday because that's all that really matters. The rest of it is just noise.
The whole thing smells bad.
He tweets a screenshot for the first time in 3 years or whatever. The stock rips higher and it gets killed all day. Relentless selling all day. That's all you need to know. That's all you need to know.
What if it comes out that Ken Griffin and Steve Cohen bought his account? It's Gabe Plotkin.
I wouldn't put it past him.
Bought the Roaring Kitty account.
I mean, listen, these guys, Stephen Cohen and Citadel or whatever, they've got the best lawyers in the world. If their lawyers say yes, I have pretty good lawyers. I don't have the best in the world.
I'm sure if he's as rich as his trade would imply, then he's got pretty good lawyers too. So
yeah, agreed. You might even have the same lawyers if you catch my drift.
That's what I'm saying.
Yeah, perhaps. I don't know.
Here, why don't we look at the? Why don't we, since we're on the subject, mine as well, and I'll reiterate something I said yesterday. But throw up the chart. This is what we're looking at here, slide 2. So this is the GameStop. This is former resistance that we've seen for years and years and years. In GameStop, you got that breakout after the after the COVID, right? Absolutely ripped with that squeeze, came all the way down, retested that former resistance and bounced. These are the monthly candles, so this does not include yesterday. And I wanted to mention one more thing. I know I said it yesterday. This is fun. This is funny. This is entertaining. All of those things. You could trade it. You can make money. You don't have to give your profits back unless you're Roaring Kitty. But for the rest of us, we don't have to worry about those things. E-Trade's not going to shut down our account, right? None of those things we have to worry about. But let's just put things in perspective. It's a less than $10 billion company. It doesn't matter. It's irrelevant. This doesn't matter at all to the overall market. Nothing. This doesn't, irrelevant. It's a rounding error, and that's putting it nicely. So let's keep that in mind, that the amount of attention that this is getting versus its actual significance to the market could not be further apart. Now, with that being said, look at the form of resistance turning into support, right at that level. You think Roaring Kitty's got a technician on his side? Probably.
I don't know, but I like to scroll Reddit before I go to sleep, which is a terrible habit I have to break. But I see a lot, especially yesterday, a lot of posts about this and what it means, and people just piling in after him. And I just want to say, and I'm preaching to the choir here, but like, the price is the scoreboard, and the scoreboard shows you who's winning. The price shows you who's winning.
Yeah.
If the thing goes down, you're not winning. Even if you think you are, you're not. You're not. Right? The price is the scoreboard. Yeah. So to me, yesterday is a huge L for GameStop. Just because, again, look at what happened after the open. Nothing.
And by the way, let's get back to what we discussed yesterday. Was GameStop a measure of risk appetite for equities, or
Yeah, okay. You got me there.
Spencer's like, oh, this is going to be my measure of risk for the day. I'm like, no.
Hey, I did say for the day. Right?
Yeah, and for the day, it definitely was not. It was actually quite the opposite, right?
Yeah. Okay. You got me on that one.
All right. Not to take a victory lap on that, Spencer, but
Oh, actually, victory lap for me. After you left yesterday, I was wildly confused about Chipotle. Not my fault. Okay. Major data glitch from the New York Stock Exchange. Lots of glitches yesterday. A lot of mispriced things. Berkshire down to 9%. Okay. Not my fault. I was confused. The market was confused. Okay.
And what happened with those glitches on the exchange? Do we have any word from that?
There was like a software update, and it caused some glitches to show the prices were down and they weren't, and Nicey had to halt some stuff, or not halt it. It showed they were halted, but they weren't. It was very confusing. It's all fixed now.
Again, the blockchain fixes this.
Yeah, I saw a lot of people trying to place orders for Berkshire A shares at whatever $600. They did not get filled. So anyway, okay.
It's like whenever GameStop goes wild, the exchanges and brokers just things break. Small things break.
Yeah, and it was over within a couple hours. No big deal.
It's a $10 billion stock that is squeezing, and the exchanges and brokers are just losing their minds. It's kind of weak, if you ask me. Bush League shit.
Agreed. Tell them, Strazza. Tell them.
I mean, come on. It's 2024.
Agreed. Weak sauce all day.
Yeah, Nils, I think it is going. I think it's going right now. I think it's happening as we speak.
Talking about Coinbase?
Yeah.
Hey, Uber's going today too. Look at that. All right.
Do we still feel that MicroStrategy is a bet on Bitcoin and Coinbase is a bet on crypto?
It's not going to change, dog. That's it. That's what these companies are.
I don't know about it's not going to change. I would argue that was an opinion and a guess on our side and something that made sense to us at the time.
No.
I'm asking if that has changed.
I don't think we're guessing. Like, think of, I guess, where their two revenue streams come from. One is capital gains from Bitcoin. That's MicroStrategy. Literally, that's their money that they make. It's just capital gains on Bitcoin. That's it. It's all that's what you're buying when you're buying that company, right? And then with Coinbase, you're buying transaction fee revenue growth on all of the cryptos that they offer. So hundreds of cryptos, right? So as long as those two businesses keep doing what they're currently doing, I think that's the bet we're making. Coinbase is our vehicle to bet on a bull market for crypto broadly, and MicroStrategy is our vehicle to bet on a bull market for Bitcoin specifically. I think that's the way that everyone should think about it. Hell yeah, Sean. I already told him. Go watch the Flow show from yesterday. I think it was great. I think, yeah, we really unpacked kind of how we would play a chart setup that's coiled up like Coinbase like this. And again, it's a vehicle, right? So we're talking about Coinbase, but really we're betting on Bitcoin resolving. This trade doesn't work unless Bitcoin is resolving from this range. Bitcoin has a multi-week range it's working on resolving, a multi-month range it's working on resolving, and then when you zoom out, a multi-year range. It's all happening right now, right? So all these time frames are aligning. You can get a breakout on a short-term, intermediate term, and long-term time frame, all with one candle here today, tomorrow, this week, right? That's why I'm so excited. Brian Shannon calls that multiple time frame analysis.
You know, underrated. You know, when it comes to technical analysis, we talk a lot about the benefits, like only price pays and all that stuff. And while all of that is true, I mean, I think you got to put the fact that we can analyze markets on multiple time frames. Fundamental analysts can't do that, right? Like you can't view a company on multiple time frames.
Right.
It doesn't work that way. Like, oh, the long-term picture of the fundamentals looks good, but short-term, like it doesn't make any sense, right?
Fundamental analysis is a point in time. Yeah, for sure.
And also people are like, wow, technical analysts only look at the past and then, you know, try to make guesses about the future. And I'm like, what do fundamental analysts do? Do they not look at information from the past?
Oh, I'm sorry. I didn't know that these Wall Street forecasts were set in stone. I thought that they were guesses.
No, they're designed to be changed, right?
Oh.
Right.
Oh.
I have like arguments. I don't even know why I'm arguing with these fools. They're like, oh yeah, technical analyst only looks at the past. And then I'm like, you are literally telling me that you are analyzing the business, which by definition is only information from the past, right? Like it's just physics, right? Like you cannot have information from the future. No?
Dude, I'm with you.
I mean, yes and no, because what they would say, of course, JC, is we do have estimates on the future performance of the business, right?
Yeah. And I could give you estimates on the future performance of the price too. What good is that going to do? You don't know. I'm just
relaying what they would say.
You know what I mean? Like it just seems silly. You're taking information from the past. Again, it's just physics. You can't have information from the future. We all have information from the past. Some people are looking at income statements and balance sheets, and some are looking at price. Right? So you can't have data from the future.
Hey, JC, is
yes.
Binance kicking this thing off right now?
I mean, I was talking about it last night. You know, the relative strength that we've been seeing in Binance is certainly not something that I would have seen coming. But the fact that Binance is literally making new 52-week highs as we speak, is that right? Do I have my math right? Making new 52-week highs as we speak?
New multi-year, new all-time highs.
No, not all-time highs.
It's not?
No, we're not above the 21 highs in Binance.
Oh, we're close though.
Not close. Still have a lot of work to do.
What are you talking about? Look at the chart.
I'm looking at the chart. I'm staring right at it.
So 2021 highs are at 690. We're like 2% away. Okay. Yeah. All right.
Yeah.
You guys want to look at the you guys want to look at the chart report real fast before we go?
We need to see 700. Yeah, hit it.
See what we got here.
Is Pat in from Sri Lanka?
No,
we just have the chart report.
No. But we haven't done this.
It would have been cool to have Pat in from Sri Lanka.
Yeah. Well, we hadn't last week, but
talk to me about the chart of the day. Did I make the cut?
This is not the chart of the day. Let me scroll up. Chart of the day is from Ryan Dietrich about the best May we've had in how long? A long time.
I also like the stats about the semiconductors yesterday.
About semis?
Here, hold on. One thing at a time.
Like 7 months of 12% plus gains off the bear market lows. Wild.
So this is chart of the day from Dietrich. Best May for the S&P in 15 years. And as I think the point he's usually trying to make is, speaking of the future, more often than not, markets are higher at the end of the year, right? That's the point he's usually making.
I think the stat is 12 months later, the stock market is up like 70% of the time. So when people are like, well, when this happens, the market is up 70% of the time, it's like, well, that doesn't really help anybody.
When you wake up late on a Tuesday you can also run those stats, and the market's up 70% of the time. 12 months.
All right. Here's the SMH thing from Frank.
There it is. Shout out Frank Cap.
Frank Cap, some of the best, simplest, just top-notch technical analysis.
Get him back on the show, Spencer.
Yeah, I feel like he was just on a couple weeks back. But,
We need him again. We need him again.
We need him again. I mean, he's just a cool customer.
Exactly.
Frank Cap.
Yeah.
All right. That's and then Sam had a good chart about the dollar breaking down. Oh, and then there was a thing about the Goldman Sachs commodity.
Look at that volume
index.
profile. Throw Sam's chart quick. Throw
Wait,
Sam's chart there. Look at that volume
did it pass
profile of the dollar.
Yeah.
Look at
There you
that.
go.
I love a good volume profile. You know, I really do. Especially like a light colored volume profile where it doesn't like really, impact the cleansiness of the chart. I really like that a lot.
So dollar down. Dollar down.
For how long you think? And does that mean stocks up? It's been messy.
It hasn't meant stocks up.
No. or rising dollar hasn't necessarily meant stocks down either.
No. Interest
Interesting.
rates too.
Listen, as bull markets progress and correlations come off,
It's
intermarket relationships come off too. We've seen it.
Here's what's most concerning about the price action in tech for the past, 4 days now, 5 days now. Rates have been rolling over. So that's a change in character in terms of the tape. In other words, all year, last year too, if you come in and the 10 years down big, I could tell you, okay, Brett's going to be pretty solid today, at least particularly among growth, right? I'm going to see a lot of green. A lot of stocks are going to be up because rates are down. And then vice versa. Oh, rates are up big today. It's probably going to be a rough day for market internals. Most things are going to be lower. All of a sudden now, rates are rolling over. And I would say they're doing it with momentum since last week. And tech stocks are getting hit as that's happening. I don't love that. I really don't.
Yeah. I mean, we're seeing definitely a change in character. Definitely.
Yeah. Now here's another question. Can you throw up the software chart and the Binance chart for me, one after the next? JC, question for you. Is software going to be completing this little multi-month bearish pattern? We call this a top. Is this pattern going to be executing to the downside? Lower prices for software. As cryptocurrencies, now throw up the Binance. These are just tech stocks, or a lot of times we would say software or internet stocks. As Binance and other cryptos, hopefully Bitcoin, right? Like we've been talking about today, are completing these patterns higher.
I mean, software never broke out above the prior cycle's peak, but semiconductors did. Technology as a group did. Cryptocurrencies look a lot better than software. I mean, it seems to me like it's more of a software thing.
All right.
You've got really good software stocks and you've got really bad software stocks.
Yeah.
Maybe not as extreme as the bifurcation in consumer brands and stuff like that. Where you have, restaurants and consumer products that are doing great, and you've got restaurants and stores and consumer products that look terrible. So you have the biggest bifurcation there. But in software, you're seeing it too.
So we have a bit of a software specific problem here.
I like it.
Semis
for now.
Semis look great. Semis continue to look really, really good.
At least for now. Yeah.
Recess. Boom, boom, bang,
It is,
bang.
Spencer. I want to give a big shout out to the 7 Mile Island. A lot of people in this country, because they watch too much MTV, and people with bad tans and just really weird, angry, roided up folks with their tans and laundry and gyms or whatever.
Jersey Show is one of the best shows ever. How can you make fun of this show? This was like Jersey Show revolutionized reality television.
I was too old. I was too old for it when it came out.
Good.
I did sit next to Snooki at the Dolphins-Jets game last year. Snooki's a Dolphins fan. Fun fact.
Of course you did.
Yeah.
Miami people now did like in standard Jersey fashion.
But it was in New Jersey, the game, to be fair, in East Rutherford, which is lovely this time of year. Listen, Avalon, Stone Harbor, it's a 7 Mile Island. It is fantastic. It has nothing like what you'll see in a reality TV show. They don't let those types of people here. It's a very safe, family-friendly place. Good eating, good drinking. Again, not a lot of people. 7 Mile Island, highly encourage you. Skip Wildwood altogether. Don't go there. Come here. Go over to Cape May, spend an afternoon, look at some history, and then come back to Avalon, have dinner here.
I'm excited for your summer. It sounds lovely.
It's wonderful. It really is so nice. And it's only 2 hours from my house. So I like that. Like, it's not like I have to get on a plane or go like 6 hours or 5 hours. It's 2 hours. Easy.
I like Beach House, JC. Spencer, do you think he's in a better mood when he's at the beach?
Everybody is in a better mood when they're at the beach. Please.
Yeah,
It does things to you. That's all.
Strazza, we don't all live on the beach like you. Some of us have to actually travel
for the
there.
record, there are no beaches in Key West. It's not a beach town, Spencer.
We have rocks and water.
You have rocks.
Oh,
There's
that
no
sucks.
beach.
Yeah. It's okay.
I don't know.
I still get that therapy.
Spencer,
All
go
right.
to Key West. See for yourself. Go get
All
a
right.
sloppy Joe.
All right, that's what we got. It's Tuesday. We got chart request live at 1 o'clock. I don't think we're doing spaces today, Strazza.
Spaces. I have so much shit to say. We are 100% doing spaces. We didn't do it last week. The people want to talk. So
All right.
I
want to talk. All
you don't
right.
have to talk. You don't have to talk. You just hit a button for me.
All right. We'll see you
Thanks,
there.
Greg.
Hey, check out all the links in the description. Links to last night's conference call, the hot corner, the chart report. It's there. Get it. Got it. Good. Make money. See you later.
Adios.
I can't take no